My goal is that if you take this assessment, you will walk away with real insights. You can make stronger decisions, you can shift. And then what you'll do is you'll position yourself to just have the next decade be not just the best of your career, but it will put the last 20 years to shame with the amount of opportunity we have. Guys, the strongest mortgage professionals that are going to exist at a high level tomorrow, they're not the ones that keep doing what's worked for the last 20 years. They're the ones that are adapting, evolving, asking the right questions, and really building appropriately. All right. Hey, everybody. Good to see everyone. So this webinar that we have here today is really going to be focused on the theme of curiosity. So for those of you who don't know me or haven't been on our webinars in the past, my name is Ryan Grant, president of NEO Home Loans Powered by Better. I was a co-founder, co-creator of Loan Atlas, Art of Homeownership. Used to be one of the top 25 mortgage professionals in the country. This is my family here on Halloween. As you can see, our lovely little dog. And if you are not already, I would encourage you, follow us on our YouTube channel. Just subscribe to that channel. You'll get a lot of this content. And anything that has to do with Instagram, any social media, just take it, copy it, do what you want with it, make it your own. And we'll make sure that we're continue putting out good content here. So you can scan this QR code. It'll take you to our link tree. You can sign up for all the different things that you need to really make sure that you have all the information consistently at your fingertips as we're providing it. One thing that I would encourage is ask yourself this question. What if today's most important questions are the ones that we're just not asking? Think about that. Our industry, unfortunately, has not done a great job in teaching us how to ask questions as owners. Imagine you're flying a plane right now. Things are going great, weather's good, heading in a good direction, and then you see a storm on the horizon. That storm comes in, you're in the air, you have the controls, but you've lost direction. You don't know the instrument reading all that well. You don't know how your plane's going to respond or how to find your way. And that analogy I'm using is one that I think is appropriate because what's coming in our industry is that new version of the mortgage industry. And if we don't know what's coming, if we're not intentional about it now, or we don't prepare for it, then we'll lose our way. And I just genuinely don't want that to happen. And for the first 15 years of my career, I was essentially flying blind. I was moving through the industry with a loan officer mindset. And I get asked the question. I was just on a podcast before this, and people ask me if you can go back and do anything different, what would it be? My answer is I would have really asked, what do I not know? I would have really wanted to know what questions should I be asking? And as mortgage professionals, we're not originators anymore. The landscape is rapidly changing under our feet real time. And if we don't know how to assess our business on an ongoing basis to have a viable future, we're going to get caught off guard. Right? I talked to an amazing mortgage professional last week. He does about $60 million per year in production, but he is running into so many challenges, and he felt very disheartened by it. He just didn't know like how to create a future that was scalable and created balance in his life, but also was impactful. And so he took the assessment that we're about to go over. And at the end of the conversation, he said, Ryan, I've learned more in the past hour with you going over this assessment than I have in the last 10 years. So that's why we're here. Right? That's why we're here today. I want to show you the questions that you need to be asking, and more importantly, why you need to be asking them. And look, this is not just another checklist. This is about fully zooming out and asking yourself, what's working in my business and what's not? What's holding me back? These are often things that we don't see. These are often things that we don't ask about. And then a really good question is, how is my business built for what's coming next? In other words, this is your chance to step back, really get a good perspective, and then just proactively strengthen your future rather than reacting to an uncertain tomorrow. So what we're going to do here over the next 40 minutes or so is we are going to take this assessment together step by step, and we'll help you break down the questions so you can just understand them more deeply. And then my goal is that if you take this assessment, you will walk away with real insights. You can make stronger decisions. You can shift before change actually forces you to shift. It's called a success pivot. And then what you'll do is you'll position yourself to just have the next decade be not just the best of your career, but it will put the last 20 years to shame with the amount of opportunity we have. So as we get started, my ask is simple: be really raw in how you answer these questions, like super honest. Right? Be curious. A lot of times what we find is people try and answer the questions to defend their position, and that's not going to help anybody. You just want to be really honest and raw about how you answer them. You're probably going to hear me say the word honest quite a bit. And then just be open to the fact that we can only get better by knowing where we have deficiencies to begin with. And we've had a little over 500 mortgage professionals fill out this assessment completely. And the awareness it's given them has been incredible for them, and it's been able to help us help them. But there's also, I don't know how many hundreds of people who've actually started this assessment. And then as they go through, they start getting disheartened because they're realizing, like, crap, my business isn't really where it should be, or it's not where I want it to be. That, I don't know whether it takes the wind out of the sails or what it is, but then they just stop. Like, they stop halfway through, they stop after the first part. And that is crazy to me. It's crazy that you can get to a place where you're like, I don't like how these questions make me feel, so I'm just going to pull the ripcord. When it's uncomfortable, that's when you need to lean in, right? That's when you start to realize there's challenges in the business. We're going to walk through the whole thing. Do not stop taking it. Take it to the end. And then when you finish, for those of you who finish, I will send you a link where we can connect. I'm more than happy to help you hit these issues head on, help you understand how to navigate them, help any issues that you see, we can fix those. But guys, the strongest mortgage professionals that are going to exist at a high level tomorrow, they're not the ones that keep doing what's worked for the last 20 years. They're the ones that are adapting, evolving, asking the right questions, and really building appropriately. So do me a favor and let's just scan this QR code here. And then this QR code will take you to this screen. All right, so this should be what you're seeing. If you have it on your computer, follow along. If you didn't get the QR code, just type in ownyourfutureinmortgage.com and we'll get it all in there. Okay, so first thing, take the assessment, just put your name in, Grant 877. All right, and then you're just gonna hit start. So we'll explain each of these as we go. So first question, can I make a commitment to my clients and business partners that I know my competitors cannot make? So the emphasis of this question is, can I tell them something that somebody at Bank of America or Rocket or fill in the XYZ mortgage company, can I make a commitment to my client that I know they can't make? This has nothing to do with closing on time, speed, service, good communication, 5-star reviews. Like, really ask yourself, what can I tell my clients that I'm confident that the rest of my team can or cannot make? So for me, I know that answer is yes. I can tell them how we helped them before, during, after, because we've built that. But for a lot of people, the answer might be no. I don't know what I can commit to that my people can't make. So I'm going to put yes. If your answer is yes, great. Just understand why. If it's no, no big deal. So move to the next one. Do my referral partners leverage my value proposition to help them generate and convert more clients? So when I answer this, my answer is yes, because the agents that we partner with get to say, hey, Mr. and Mrs. Smith, we're not just an agent team that's going to help you for the next 30 days and then market to you. Between us and our financing team, we're going to follow up with you proactively and consistently for the next 30 years in a way that you've never had an agent and a lender do before. So you can see that our agents are out there pitching a long-term, consistent, proactive process. Maybe your agents are pitching something else that you do, but it's not just your speed, your closing on time, your customer service. It's really what you say that now they can say that their competitors don't get to say. Helps them generate leads, help them convert more leads, help them be more valuable. So answer that in the best way you know how. If the answer is yes, great. No, we obviously, my answer would be yes there. Number 3, do I have a documented, repeatable process that consistently delivers value before, during, and after closing? So this is where I struggled with integrity early in my career, because I would tell people how valuable I'm going to be, mostly after the transaction, but I didn't actually have a way to execute on it consistently. Right? I didn't always engage with my past clients. I didn't always follow up with them the way that I should have. And I just felt out of integrity making a commitment. And so now we've broken it down to, okay, how do we help you before a transaction ever starts? How do we help you during? Most importantly, how do we help you after? Here's the documented process that happens every step of the way before, during, and after. Here's who does it. Here's how often it happens. And here's how I can scale it so I can tell 100 clients a month that they're going to get the same experience as I could one client a month. So it's not that you just have a process that you can do. It's one that you can execute for hundreds of people a month, regardless of scalability. So if your answer is yes or no, fill in that answer. For us, it's yes. We'll move on. All right, next is, and this is all value proposition oriented, and I'll tell you when we skip to the new pillar. Next is, do I consistently convert leads due to the value I provide before they go under contract? So a lot of times people ask us, why would I go with you? And then we break down before, during, and after. But a good majority of the time, people choose us over cheaper versions of us because we show them how we can make them look like cash, how we approve their loan in advance, how we can get them to remove their contingency. We show them the appraisal gap strategy that helps make sure they can remove their appraisal contingency. We let them know how we're going to reach out to the listing agent, our relationship, our locality in the community, how we're going to help them in so many ways, how we help them save money on the price of the home, how we help them sell their proceeds to incentivize their interest rate. And so the before part of it is really important. And I think most people should be able to answer yes to this, but just answer it honestly for yourself. If somebody asks why you, the before is a huge part. It's 30% of your overall value proposition. So whatever you can do to answer yes to this, obviously you want to work towards, but answer it honestly to get a good assessment of your business. I would answer yes. Next in value proposition is the bulk of my value delivered after closing through long-term strategies to build wealth and to create financial freedom for my clients. This is something that I'll just be honest, most people cannot answer yes to. But if you can confidently say, man, the Smiths have actually grown their generational wealth after the mortgage, not just because the home went up in value. You almost have to take that completely out of the equation. It's because you put them in touch with a financial planner, you help them with their budget, you help them manage their liability, got them in touch with a CPA to maximize their tax benefits, that they are protected with the right insurances, that they have estate plans, wills, and trusts, that they have generational wealth planning with their parents and children. If you know that this happens for all your clients post-closing all the time and with consistency, then the bulk of your value really is after the mortgage. If the answer is yes, awesome, you're doing great. If the answer is no, that just means you have a huge opportunity to step into that space to differentiate yourself. So answer appropriately there. And I think this is the last value proposition one, but is my value proposition supported by company-wide resources, not solely dependent on just me or my team? This was a big challenge for me earlier in my career because I had to build a company within a company, because it wasn't in the DNA of my organization to change clients' lives post-closing. It was in the DNA of my organization to close loans, to close them on time and do a good job. But there really wasn't any intentionality or enterprise level support for me to say, okay, here's how I'm going to go attack the marketplace. Because of that, I had to build all the infrastructure myself to go out into the world and deliver my value proposition. And so just ask yourself, like, is it in the DNA of the organization? Do they have enterprise teammates that help me? Do they have enterprise technology that integrates with everything that I'm doing? And if the answer is yes, you're at an awesome company, because to be able to execute on that level of consistent value post-closing is really hard to do individually. So if you have a supporter company, that's great. If not, no big deal. That just means you some things we have to work on there. All right. So that is the extent of value proposition. So when you get this assessment results, it'll break it down into each category. And so you'll see from a value proposition perspective what you need to work on and where you rank and scale there. All right. So for mortgage economics, this is one that probably has the lowest score of the 500 plus people that have filled this out. Most people aren't going to get over 10% on this. And if you are in the wholesale broker world, I'll need to explain some of this because I think a lot of times wholesalers misconstrue this, or brokers can misconstrue this. So the question is, do I have full visibility and control over gross margins and capital markets revenue? That means that whether you're a broker or banker, do you get to see every basis point that comes into the organization? And then do you get to see every basis point that is created when the loan is sold? So if you're a broker, you have to answer no to that, because you don't know what the wholesaler's corporate revenue or corporate margin is. And then obviously they're not going to show you their cap markets gains. If you are a mortgage banker, like, you need to see every dollar coming in And then you need to see capital markets and you need to participate in all that. For most people, unfortunately, the answer is no. If the answer is yes, that's amazing. But I think a lot of times people want to answer yes to this because it makes them feel good. But in reality, most of the time the answer is no, which just means that you have work to do to be able to make that happen, which is great, right? That should be the question. That should be the conversation you start having to create that alignment. So answer however is appropriate for you. For me, the answer would be yes. Can I make pricing decisions without needing approval because I understand and control the total economics of the loan? So a lot of times people see this and they think, okay, that means I can take a concession on a loan. I can take 25 or 50 basis points. The reason why we wrote this is, could you do a 200 basis point concession? And does the company participate in that? Because you understand the totality of the economics. For most people, the answer is going to be no, but the answer really needs to be yes, because you're the business owner. As a mortgage professional, you are the entrepreneur, right? You're the one that needs to be able to have total control over the economics. And if you know the total economics, you actually end up making better decisions. You make more aligned decisions. You create better business partnership. So I would highly encourage you guys to just be curious about this. And if you couldn't effectively lower the margin to zero to get a deal done, and you don't have that authority, that's something that you want in your realm. So answer however you would there. Next, am I treated like a business partner who is trusted to set and adjust total corporate margins to run a profitable business? So if you run a P&L or if you're a broker, you're going to set your margins. And typically it's going to be your branch margin or your brokerage margin. But when I say total margin, corporate margin, that includes the company. So if you're sending a deal to UWM, do you get to set their margins? If you're working for XYZ Mortgage Bank, do you get to set their margins? And that is the key to transparency, is that you're not just setting the margin that relates to you, because that's only a portion of the economics. It's, do you get to set the margin for the entirety of the organization as it relates to your business? And then do you participate in that transparently? That is going to be a key to the future, because if you don't have that level of engagement or visibility, it's going to be really challenging to really understand the true economics of your business as the business owner. So answer yes or no appropriately there, and obviously we can help you understand how to do it. Next is, do I receive transparent documented reconciliation that outlines all of the revenue on each loan I close? So when a transaction closes and a loan is sold, there's what's called a purchase advice document. Every mortgage company gets it. If you get to see the purchase advice document, that means you get to see every dollar that is created when that loan is sold, which means you have the full visibility into all of the margin of that loan. Without seeing that document, you don't have the transparency and you're just relying on trust. I'm all for trusting people, but verifying is also very helpful. If you can see the full reconciliation and all the dollars coming in, answer yes. If you don't have that availability, answer no. Okay, next on economics, does my branch earn bonuses from gross and capital market profits, allowing me to participate in every dollar revenue? So what I mean by that is, on a quarterly basis, if your margins are actually higher, if you've increased total margin and you've created margin expansion in your business, and if capital markets does well, if you're pricing well and capital markets performs well, are you getting bonuses as a business partner to those revenue streams? If the answer is yes, awesome, you've created something really special. If the answer is no, then again, there's work to do, but we can help you understand how to participate in that. So answer that yes or no. Next on economics is, when margins expand, does the increased revenue flow primarily to my business and not the company? Margin expansion is something that you as a mortgage professional need to have a very good understanding of at all times. Same way you need to have understanding of margin compression. The first time I learned about margin compression was when rates went up in 2018. And all I was told was, margin compression's here, you need to make less money. I was like, all right, whatever we need to do. I don't know what that means. Let's keep the train on the tracks. But then when margins expanded massively, I never got the phone call to participate in that upside. And that is a big challenge, because why would we ever sign up for a business model where we make less when times are hard, but we can't participate in the abundance of when times are good? And unfortunately, if you're a broker, you signed up for that model. And unfortunately, if you're a standard retail mortgage banker, you signed up for that model. And so you understanding margin expansion is really helpful. If you're not already on our raw price distribution, just shoot me an email or shoot me a message on Instagram that you want to be a part of it. And every 2 weeks, we will show you if margins are expanding or contracting. and we'll explain it to show you correspondent margin versus wholesale. And that's where you can see if margins are expanding or contracting to really help run your business more appropriately. But then as margins expand, the greater portion of that margin expansion should go to you, right, as the business owner. Unfortunately, most models have it just set up to where it just goes to the company and you don't participate in that expansion. So you want to make sure that you disproportionately win in a margin expansion timeframe. And if that's not happening today, obviously the answer would be no. If it is, the answer yes, and I can help you either way. So that's the economic section. Now we're getting into lead generation. And when you think through the future of this business, I'll be on the MGIC webinar tomorrow talking about this. It has a lot to do with the webinar we did last month as to we as the mortgage professionals, not only should we get to the consumer first, but I think it's the most appropriate engagement source for the consumer is to understand the financing first and then go out to the market. And I think that the more consumers realize that, more consumers are saying yes to talk to realtors. We're seeing that at an incredible level. 30,000 people a month are applying to learn about financing before they engage. Lead generation is going to be important for you as a mortgage professional. You want to get to the client first. You want to help them go from I'm not sure to I can't wait. And then you want to get them in touch with the best real estate agents and the best builders and financial planners. Question 1 on lead generation. I have a lead application campaign for each type of client, ensuring high conversion and personal touch. So what that means is every type of avatar of client. If you have a disc profile for the client, they go on the right campaign. If you have an economic avatar, like in ours, we show if someone's very wealthy, if somebody's fluent, if somebody is a middle of the road earner, if somebody is in a less than favorable financial position. We don't want to market to all those people the same way. We want to meet them where they are, and we want to make sure that the campaign helps them get to where they can go. So think about if you're generating leads, does your marketing or your follow-up campaigns meet them in a place that speaks specifically to them in order to help them feel like it's more personable and less of a just canned campaign there? So obviously answer yes or no appropriately. Okay, so in lead generation, do I generate at least one exclusive purchase lead daily through my own campaigns? This is a hard one for most mortgage professionals. It's a hard one for me. Outside of 12 months ago, I would have had to answer no to this because I didn't have the ability to generate, pre-approved clients or people who were interested in buying a home because most of my business came from my real estate agents. It came from financial planners, it came from builders, it came from my database, but now that most of our database is locked into low rates, not too many of them are planning on moving up or buying. It's challenging for me to generate an exclusive lead that doesn't come from one of those sources. That's essentially a net new piece of business. If the answer is no to that, there's work to do, but it's a good problem to solve. It's probably the best problem to solve. And if the answer is yes, then obviously you have a great lead generation campaign or a pre-approval campaign and continue down that path. Next on lead generation, do I keep 100% of commissions even when leads are company generated? So there's no shortage of companies that are creating leads for their team. But where I find a challenge is that's how they end up treating you like an employee, not a business owner, right? If they treated like a business owner, they would generate the leads at scale from an enterprise perspective. They would drive that lead down to you as the local mortgage professional, allow you to distribute it out into the world with the best real estate professionals and builders. And then you wouldn't get a 50 basis point commission on that deal because that's really an employee-employer mindset. You would have full autonomy to price that deal however you want. And then on transactions that close, you would just pay a certain number of basis points to effectively make that lead spend whole. So again, companies that are doing this well, they are thinking through, look, we don't need to turn this into a profit center. We're generating an interested buyer and we drive it to our local mortgage professional. We don't need to make revenue off of that. They can, obviously, if that loan closes, the company will make revenue in the stack of economics. But the real win is for that mortgage professional to be entrepreneurial with that lead and then take it out to the world and create 2 to 3 more. Because that's where the massive amount of revenue will be created, not just on that one deal. And nobody's super incentivized if they're going to make 50 basis points to do the follow-up necessary to engage at a high level when they might make 120 or 200 basis points on other deals, right? And so every one of these leads need to be consistently worked in the same way that you would if you self-generated something. All right, next in lead generation, am I using at least 3 digital channels for consistent lead generation? Again, lead generation is the name of the game moving forward. It's not who's referring you. It's not just database. It's not just social media. Now, if you create like a social media lead funnel, that's great. That's a digital channel. If you have a web page that is driving traffic, if you can get leads from AI search, which is effectively Internet 2.0, all those are great, but you want to have at least 3 digital channels where you're seeing some level of consistent lead generation, 5 a week, 10 a week, more than that, because then you'll have the opportunity to, again, own the lead, take it out into the world, really increase your value to your agents and builders and so on and so forth. But having this is going to be really important, and working closely with your organization to create that is going to be probably the most scalable and easy and effective way to do it. Lead generation next is going to be, does my company actively help me generate new leads and partnerships? This is important because when I was actively originating, I never in my whole career had anybody introduce me to a realtor or jump on a call with me and help me convert an interested real estate agent into a partner real estate agent or a builder or a financial planner. I never had anybody generate leads and give me any leg up. And I'm not saying that companies have to do that. Our whole careers, like for me, for 15 years, all this was up to me. If I wanted to win, I had to generate new leads, I had to generate new partnerships. But man, I tell you, it is a massive win when that can be sourced from a bigger pool, right? When you can partner with the bigger agents because you have your corporation backing you in those partnership conversations where they're generating thousands of leads at scale as an organization and then distributing them locally to help you land new partnerships and do new business. And so if the answer is yes to this question, awesome, you're in a really great place. If the answer is no, again, work to do, but we can definitely help you navigate it. Lead generation, can I refer at least 3 closed deals a month to top agents or builders from my own lead efforts? If you would have showed me this 18 months ago, I would have said, look, I don't know very many lenders in the country at all that can do this. If you give 3 closed transactions a year to one agent, they should name their child after you. Because I've met with so many top agents in the last 60 days, agents that are doing 200, 300, 450 plus transactions a year. And the feedback I get from all of them is consistent, which is my lender never refers me anything. And it's like, I used to not be able to either because all my business came from guys and gals like you. So if you can do 1 closed transactions a month to a top agent or builder, that's amazing. But if you can start to get it up to 2 or 3, you become a business partner that is of equal or even greater value to them than they could have ever have imagined. So if we think about how market share is going to really move and evolve over time, it's not going to distribute evenly. It's going to go to the top agents, the top builders, and the best way to partner with them is to bring an equal amount of value to the table. And a lot of that starts with lead generation and deal flow. So answer yes or no to that one. All right, so done with lead generation, moving into technology and scale. So question here, is my LOS, POS, and pricing tools all built on the same platform? I've seen a lot of people answer the yes to this question when it's clearly not true. So for example, if you work on Encompass and then you have SimpleNexus or Blend, and then you have Poly or Optimal Blue, that is a LOS, POS, and pricing engine that are all disparate. They're not built on one platform, which the reason why I'm asking the question is because with AI and technology being a huge part of the future of our industry, without having all of that built on one integrated platform, it's really challenging to create automation and artificial intelligence that really works and is scalable. You guys may be seeing this, but there's a lot of headlines out there that are saying there's an AI bubble in mortgage. There's an AI overhype in mortgage. And it's largely because companies are trying to create AI integrations in multiple platforms that are not built on the same system, which creates so many different problems for the way that information flows. And so if you're at a place where you have a technology that has all 3 of these in the same thing, you have a massive advantage over the marketplace. If the answer is no, we can work through it and help you understand it. If the answer is yes, you're in a good spot. Next, is there a clear tech roadmap from leadership that supports scalable, low-cost fulfillment? This really should be one of the major pillars that you hear from your leadership, whether it's if you're a broker, you should hear this from the wholesalers that you work with. If you're a mortgage banker, you should be hearing this from your team at a high level, that their main focus is to create technological scalability that decreases cost of fulfillment. Because the arms race in mortgage is, it's not necessarily a revenue or rate thing, it's really a cost thing. If we can take the cost of fulfillment from $13,000 or $12,000, which I think it was last year, if we can take that down to $3,000, let's just call it a $10,000 reduction in cost of fulfillment. If the average loan size is 400,000, that's a 250 basis point improvement, which means you can now lower your margins by 250 basis points and be way more competitive and just as profitable, or you can meet somewhere in the middle. So as you're talking to the leadership of your organization, getting really clear on how they're creating scalability through technology, which is going to lower cost, is going to be one of the most important things that we all focus on moving forward. And that's going to take a lot of different shapes and forms. Okay, next is our tech built with deep AI capabilities internally for future AI compatibility and automation. So if you look at your technology, your LOS, POS, pricing engine, CRM, anything that you're using technologically in your world, what level of AI integration or capabilities are built inside of it, not bolted onto it, that is going to allow for continual growth, learning, and improvement? So I think the mistake that a lot of people are seeing is that someone will build a custom GPT and overlay it into a list of guidelines, and people think, oh, that's tech. That's not. That's something that anybody could do. The question is when you could ask your LOS a question and it answers it because it reads that specific file, it prices it, can pull in a full application, it can call the client, it can have a conversation, like all the things that AI can do, but it needs a full compatibility suite. So if you don't know the answer to the questions, probably no. If you do know it and it's yes, awesome. Make sure you continue down that path. All right, next is going to be, do I use embedded AI to handle emails, scripts, and task management inside my LOS and CRM? For example, you get stuck on a DTI thing. Can you ask your LOS, hey, how do I fix this DTI to make it eligible? Right? And it just goes in, pulls it all, does the math, and tells you what you need to do. And then can you just say, craft an email to the consumer helping me deliver this? Pulls up a full email from everything in the LOS and then push it out. Your CRM should look for propensity modeling inside of your database. So who is most likely to transact in the next 90 days? It should model that for you, and it should create emails appropriate to each one and then allow you to push them out to your team. So like that level of AI integration inside your LOS, inside of your CRM, to where you don't necessarily have to think much, you just push activities based upon data. That's really what you are going to want to shoot for the future of this space. So obviously answer yes or no there. Okay, can I go from application to conditional approval in under a day using AI without human involvement? Granted, this is a bit of a biased one because our organization has the ability to do that. I haven't seen another organization do that, but there could be them out there. I don't know everybody's platform. This is one of the things that is going to help you as a mortgage advisor. You might see it on its face and say, I don't know if I want that. I want to be the human who's involved. What I mean by this is we don't need 5 or 6 humans involved in the fulfillment side, but you as a mortgage advisor will still absolutely be involved in the advice, the guidance, the strategy, the education, the analysis, again, before, during, and after. But the question is, if everything else can be streamlined and done without human involvement, it can happen fast. That actually means that you and your team have more time to do the meaningful things. You and your team have more time to make an impact in that client's life, in their consumer experience, in their confidence throughout the transaction, as opposed to being highly reactive to the file throughout the process. Answer that appropriately. I think most people might be no, but again, there's ways to work through that. Next on technology, do we have elite level tech engineers building in-house tools, not just managing vendors? My whole career, I'd always looked at my tech or IT team and I would ask for things, but what I realized is that they were really just IT teammates that knew a lot about technology, but they didn't actually build it. So what they would do is they would go to the vendor and ask them to integrate it or build it. They'd create an API between Encompass and the service, or the LOS and a service, or they'd find a way to get the CRM to do this, that, or the other. But they weren't actually building technology. They were really just managing connections with vendors. If your organization or your wholesalers you're working with don't have an army of engineers building elite level of in-house technology, that's going to be problematic for the future because vendor solutions are just proving to not work at as high as a level as we would have hoped as an industry. So if you don't know, ask. Just ask your leader, ask your company and say, hey, look, like, Do we have legitimate engineers here who are building proprietary level technology for us? Or are we really relying on vendors for all things tech or AI related? If the answer is no, definitely work towards changing that. If the answer is yes, that's great. You're in an awesome place. Technology and scale here. Can I scale to help 50 to 100 families a month without more hours or more hires? I think almost everyone's going to answer no to this. However, there are certain teams and certain mortgage platforms right now where they actually have the technology and they have the infrastructure where they could help. Maybe they're at 30 families a month. They could easily go to 50 without hiring a single other human being, right? Without asking them to work more hours, without working more hours themselves. And so if you're helping 5 to 10 families a month, the answer, of course, is going to be no, because you are going to need some bodies to help you do that. You're going to need mortgage advisors and production partners. But if you have a sizable team today, and maybe you're tapping out at 30 or 35, I will bet you that you could get to 50, maybe even 100 without any more hires or with maybe just a few key ones. But it takes a ton of technology, systems, and scale to really understand how to do that. And it takes an enterprise solution. Just be curious. Again, if the answer is no, don't beat yourself up, because I think 99.9% of the people would answer no there. So I'll answer no there as well. The technology portion, moving into community here. Community might be the most slept on thing in our industry right now, but I think that if you experience really great community inside of your organization, or professional community, I should say, it is a cheat code. Be really curious about this one. All right, so does my manager care about and actively support my professional growth and training with training, hiring, and coaching? So just think about, who is your manager, who is your leader, and when was the last time that they sat with you and proactively helped you by watching your game film, you having dreams and goals calls or consultations or contract meetings. They've helped watch you with your conversion. They've been a part of your realtor presentations to help you get new partnerships. They've helped you with new builders. They've helped you interview and hire new people or attract new people. That's the level of leadership that you genuinely deserve, because you're paying for it. And so just ask your question, like, am I getting active or proactive support from my leader to help me with these key areas? And if the answer is yes, awesome, you have a great leader. If it's no, you could just have a conversation with your leader and just be honest and say, look, here's what I'm looking for. Is that something we can work towards? Maybe they just aren't even aware that the necessity is there. Definitely give them a chance, and hopefully they can turn around and help you. And if they can't, that's not a great community to be in, because you're going to essentially be on an island or be a bit on your own. Next, in community. Now, does leadership help me form partnerships with top producing agents and builders? So if you have the number one agent in your market, like, could you call them and say, hey, the president of my company, the leadership of my company, my division leader, whomever it is, they asked to meet with you. Can we jump on a call to talk about a partnership with our organization? You may not need that. You may be able to get that partnership yourself. You may be able to get that meeting yourself. But man, I promise you, when the owner of a company, when the leadership of a company, when somebody that has a higher level title, even if it's valuable or not, agents and builders and financial planners, they really appreciate that. It just shows a higher level commitment to that partnership. And if the leader does it often, they'll be pretty good at it. And then maybe you only need them for 1 or 2 meetings, and then you could just replicate what they say. But ask yourself that question. If the answer is no, make them aware of it. Again, ask for it and go from there. All right, another part of community is, do I have a company provided teammate assigned to my team who consistently and proactively delivers and execute our long-term value to each of my clients? So what I'm referring to here is a client success teammate. If you're going to tell someone that you're going to be the most valuable person in their life for the next 30 years, the most valuable team in their life for the next 30 years in every aspect of real estate or finance, is there a group of people at your company that are trained, that mastermind, that constantly look to improve on value, that is assigned to you and your team, that actually goes and does that? And the reason I ask is because if you don't have that person, and if your team's not to the point where you can afford that person specifically on your team, man, it is so hard to make that type of commitment to someone, because you as the team leader just simply will not be able to execute on it. You're constantly looking forward. You're helping agents, you're helping builders, you're helping financial planners, you're helping your database, your marketing, you're in meetings, you're meeting with clients. And so it's going to be really difficult for you to have the consistency with your database. And look, having your own client success manager, you probably don't need that person until you're helping 50 families a month. So if you're helping 5 families a month or 10 families a month, it actually doesn't make financial sense for you to have your own client success teammate. It just focuses on that. First of all, there's not enough for them to do. And secondly, it's just not going to scale. It won't work out. Financially, it won't make sense. But if you have a company that has an entire group of client success managers and you could just pay per transaction or per closing, that's a huge opportunity for you. It gives you the ability to make a bold commitment without having a massive team to back it up. Answer yes or no there, and we'll help appropriately. Community. Is mentorship and growth part of my company culture without paying extra for coaching? One of the things that always struck me as strange is that a lot of these large mortgage companies, they have really great people. But oftentimes these great people stay in a silo. They don't want to share their secret sauce, or they don't want to necessarily let people know what they're doing because it's not in their best interest to create competition in their own organization. So what happens is a lot of times people will go outside and they'll pay for a coaching group, and their coach will meet with them and they'll say do X, Y, Z, but then it's hard for them to bring all that coaching and shoehorn it back into a company that might not use that technology, that might not support that level of team building, that might not have that economic infrastructure. There's just a lot of disconnect between an external coach and internal capabilities oftentimes. And so what you really want to look for is asking yourself, is my company or my mentor providing so much value that I really don't need external coaching? I have more than enough here. And then if you want external coaching, great, go get it, go fill in the blanks, do what you need to do, but just ask yourself that question and be honest with it. All right, coming down the home stretch here of community, do I have real leadership that helps me be a better leader, a better teammate, and a better all-around person? Just talked about this on a podcast before jumping on here, but our industry has never had leadership training. We don't necessarily train people on how to be a great leader to their team, to use the right verbiage, to make sure people don't feel like employees, but they feel like teammates and partners, and to really be a better, more empathetic, more grateful, more connected, more present human. Those things, again, they're not taught in our industry. And that's why people typically have to go get coaching externally. But you could bring that to your organization. You could bring that to your community, or you could encourage the group to do it. But you really want to work on this, because just selling mortgages is not that fulfilling. But when you can really enhance and improve and impact a lot of people's lives in a multitude of ways, it becomes a really inspiring thing to be a part of from a community perspective. Okay, mission and alignment here. Question to ask yourself on alignment: are my company and I fully aligned in creating financially successful homeowners and helping each client grow their generational wealth? Is that the ethos of your organization? Is it, if you're a broker or your wholesalers, focus on that because they need to be in order for this to fly? If you work at a mortgage bank, is that the company's North Star? And if it's not, you're going to have to create it on your own. So again, you're going to create a company within a company. You're going to have to create a brand and a brand recognition that is not consistent with the brand that's all over all of your stuff. And it becomes a disconnect. Whatever you can do to create alignment with your organization where this is the outcome, because a lot of you guys know me, I firmly believe this is the difference between a mortgage advisor and a loan officer. Mortgage advisor, their whole goal is to create financially successful homeowners and help people grow their wealth. A loan officer, their job is to close loans. So if you don't have a company where they only want mortgage advisors and only focus on helping mortgage advisors, that's one that you're going to want to find relatively quickly, because the alternative is got to be lower price, got to be cheaper cost. Okay, next one. Am I surrounded by A players who believe in the same vision for the industry? Now, this is tricky, right? Because you could have a team of 4 or 5 people, and maybe all those 4 or 5 people are A players and they believe in the vision of the industry. Maybe you're part of a branch and there's 10-ish people there, and maybe they're all A players. But what I mean by this is everyone in the organization an A player, or all the originators or all the mortgage advisors A players who believe in the same vision of the industry. Because what happens is when you start to have a bunch of people that are effectively selling a different product at the same company under the same brand, it just creates confusion out in the world. When I was at a previous company, I would get a call being like, hey, my client didn't get all the things that you guys say you do. I don't have no idea who your client is. It's a different branch. It's a different person. So here I am out in the world trying to tell people who I am and what I believe in and what I stand for. But if I have 20 other people in that market with the same brand who don't deliver the same type of value, who don't have the same vision, then mine gets immediately watered down or almost evaporated. Because the next time somebody sees that the main company brand, it just doesn't mean as much. So not everybody gets that. You really want consistency in the totality of the brand. All right. So do people at my company feel inspired when they wake up, safe about their future, and fulfilled by their work when they go home? Man, this is straight out of Infinite Game. You could just ask yourself this question first. Am I really inspired when I wake up to do what I'm about to do? Do I feel safe and secure about my future, knowing that there's a lot coming? And when I go home, am I massively fulfilled with the work that I've done? I would encourage you start by asking your team this question and ask for like raw honesty. Are you really inspired when you wake up? Do you genuinely feel safe about the next 10 years? And when you go home, are you proud of what you've accomplished? And I think we would all be, a lot of us would be shocked by the answers that even our immediate teammates might give us if we genuinely give them the freedom and empowerment to be honest with these answers and not just answer them because you're the boss or you're the leader. And I would just create like a survey or ask anybody at your organization, like, is this how you feel? And if the answer is no, work on that because there's not a long future for people that don't check these three boxes. Now, people will burn out or they'll get out. Next, is my company measure success by how financially successful our clients become, not just close loans or revenue? Again, there's a lot of stuff going on online. It's number one lender, number one this, number one that, number one in volume, number one in units. Nobody actually agreed on what number one is. But if somebody asked me, what does it mean to be the number one lender? I would say the number one lender is the lender that creates more wealth in their family's life long term than any other mortgage company. That the measure of success is how successful the clients become beyond just how much their home goes up in value. We can't use that as an excuse anymore. Oh, look how much wealth I've created for my clients. You didn't create that. You just gave them a mortgage. The housing industry created that for them. What did you do on top of that? Did you help them buy a home they wouldn't have bought if you didn't give them advice? Did you help them sell and transition the revenue or transition financially appropriately? Did you help them manage their finances or invest more appropriately? That's the kind of stuff that the number one mortgage company should be known for. Nothing to do with volume or units. And it likely happens that over time, that company will probably be number one in those categories, but only because the consumer demands it. We just have to work hard to make that the reality. Next is, does my company operate as a true partnership, not just employer-employee? Again, true partnership is full transparency, full everything there. And the answer is going to be pretty clearly yes or no. So for sake of time, I may need to go through these relatively quickly here. Do I have the ability to own equity in the company? This one is huge. If you're not really a shareholder or a stakeholder in the organization, every time the company grows, it's actually a hindrance to you. There's really big companies out there that there's 50 or 60 different people in your market that are running around with the same brand that you don't even get to compete against. That if they do a bad job on a loan, it actually is bad for your brand. And when you think about it, like if a company says, oh, we just brought on a great new branch and they're in your backyard, that's actually a bad thing for you. But if you owned equity in the company, if the company's success meant your success, then it's a great thing. Then you welcome that team with open arms and you treat them differently because a rising tide literally lifts all ships. But without it, it actually is a negative thing for you. So you want to make sure you have alignment as a true business owner. Do I have clear stipulation in my contract that if I ever leave, my company will not solicit my clients? Look, I've left a company and they immediately sick their call center on my entire database. That is not a business partner, right? That is someone who saw me as an employee and said, if you're not going to be here, then we're going to try and take all your business. That is complete garbage. So you want a stipulation in your contract that states if you ever leave the partnership, that company will never solicit your past clients. And look, I know it's a big ask, but if the company is really thinking of the future, they will absolutely put that in your contract. And if it's not in your contract, go back and renegotiate to make sure it's in there. Same thing with wholesale. Make sure they're not doing that either. Do I have a clear stipulation that if I ever leave, that I don't have any non-compete, non-solicit? I can't tell you how many people are at their company because they're afraid of what happens if they leave. I can't take my team. Maybe they won't let me compete. They're going to sue me. And look, I can't imagine being the owner of a company where people are there out of fear or fear of retribution or fear of their team falling apart. So they stay, even though it's not great, only because they're afraid of the uncomfortableness it will create. So you want no non-compete, you want no non-solicit, you want all that taken out of your contract. Anything that you've done, built, or created that when you're with that organization should be yours to transition as soon as you don't believe that group is the right partnership. That is the future of this business. That is what true business ownership looks like. Next, do I have a stipulation in my contract that I can take my team with me? Anything I brought or built to the company. So the previous one was really more about clients. This is more about your team. And then you'd be 100% complete here. You can see it'll show you your score. It'll show you where you fall. I'll get notified and it'll tell us, hey, okay, here's a person who filled this out. Here's their score. You can book a time with me right here when you get to the end of it. And we can just walk through some of the deficiencies and how you can work towards them. It'll give you a bar chart here, and then it'll take you directly to our YouTube channel where you can watch all of the information on all of this stuff and just continue learning, which this will be on YouTube as well. In the last couple minutes here, I just want to say thank you for anyone watching this live. Thank you for anybody who's watched this replay on YouTube or on follow-up. If you have questions, please reach out. Next webinar is going to be the third Thursday of December, and it's going to be one that will help us understand what worked really well in 2025 and what is not going to work in 2026, but what will work even better in 2026. So you're going to be in core business planning mode in the last month of the year. It's going to be December 18th. And if you we'll obviously send stuff out, register for that webinar. If there's anything you think that we should add to that webinar, any value you think we can add heading into the last month of the year, getting ready for 2026, message me on Instagram, LinkedIn, reach out on YouTube, text me, call me, email me. I really genuinely want to know what is important to you to learn to make sure that 2026 through 2036 is the best decade of your career. And so we'll look forward to seeing you all at that one. But hopefully you'll take the time to fill out this assessment, be super curious, be raw, be honest, happy to help you navigate any, whether it's inefficiencies or any kind of areas where you might not really be built for the future. There's typically a few tweaks we can help you with that there. So thank you guys for being here. Have an awesome rest of your day, and hopefully we'll see y'all soon. Thanks, team. Bye-bye.